Hey guys, so I figured I'd hop on here and make a video about fair value gaps because I was just kind of watching my previous two trade recaps back, and I noticed that fair value gap was a term I used a lot, and I just kind of wanted to clear it up, like what it means, like how to identify them. I'm going to be defining them as well, and then kind of pointing out how you can see them within the market and what they're going to be doing for you guys when you're looking to take a trade. So first, we'll just go ahead and define it. A fair value gap is a imbalance within the market. So basically, price action always wants to balance out typically, right? So there's always discrepancies with every theory and everything like that, right? So when an imbalance occurs within the market, price most likely wants to go balance that imbalance, right? Hence the name. So I'm going to go ahead and draw one out for you guys here. So if we're looking at a bullish example, if we are currently in an uptrend or bullish order flow, it's going to look something like this. And do not mind my drawing because it's going to be absolutely horrendous. Okay, I'll go ahead and draw it out here. I don't know why that first candle is so small. Okay, so this is what we have here, and this is a bullish fair value gap. How we're going to draw it out. In a bullish version, when we're in an uptrend, you're going to take the top candle, the top wick of the first candle, and measure it out to the bottom wick of the last candle. And the reason that this is an imbalance is because we have a small move followed by a substantially large move, creating that imbalance, right? It's typically a 3 candlestick pattern. You can find different examples of a fair value gap that I'll kind of get into later, but this is going to be your bullish example. I'll go ahead and draw a bearish example. Same concept, literally just the inverse of what I just showed you guys. That was a good candle. Ooh, okay. Getting a little creative there. All right, so this is gonna be our bearish example, and it's just gonna be the vice versa. We are going to take the bottom wick of the first candle and measure it to the top wick of the last candle. So how to use them and use them as a confluence, really. What we're looking for, if we have a bullish example, we are currently in bullish order flow. And what order flow is basically just this. This is a little sidetrack, but this is necessary to know what a fair value gap does for you. If we are in bullish order flow, we are constantly making higher highs and higher lows, right? What are we doing when we're within this, right? We're creating fair value gaps within these movements to the upside. If we are currently in bullish order flow, we're creating fair value gaps within, retesting them, and respecting these fair value gaps. And we're all at the same time, we're also respecting the overall bullish order flow. Same for a bearish example. If we are currently in bearish order flow, then we are creating fair value gaps within, and we are visiting those fair value gaps. We are respecting the fair value gap, altogether respecting the current bearish order flow. Order flow is just the current trend that we're in. So if we are in an uptrend, we are in bullish order flow, and if we are in a downtrend, we are in bearish order flow. So what are we looking for when we create a fair value gap? Well, we're looking for it to either get respected or disrespected. So in this example, if we were to just blast right through this fair value gap and get a candle closure below, we would be disrespecting this fair value gap. To respect a fair value gap, we would visit this fair value gap and we would reject off of it, aka respecting the current order flow, which is an uptrend, and we'd also be respecting the fair value gap. So altogether, we're respecting the overall trend. So currently, we're obviously in a bullish trend. If we create this fair value gap, price comes back and touches within it. It does not close below, and it rejects off continuing our current trend. That is called respecting. And if we were to just blast right through it and we were to get a candle closure below, we would be disrespecting. So same example here for the bearish example. If price were to come visit and we would reject off, we would be respecting that fair value gap. And if we were to blast right through it, we would be disrespecting it, and we would now be creating bullish order flow off of the current bearish order flow because we just disrespected this fair value gap. Not every time. Take it with a grain of salt. Every time you learn something about trading, really take it with a grain of salt because, there's always going to be discrepancies within each model, each strategy, each confluence, each indicator, right? So there's always going to be discrepancies that you're going to have to be Nothing's going to tell you exactly what the market's going to do, and there's no magic key to get every single trade right. So moving down to the actual market here, I will go ahead and point out some fair value gaps. Just looking for the best example that I can here. You know what? I'm just going to actually use my Thursday and Friday trades. It's currently Sunday, so I'll just go ahead and use my Thursday and Friday trades to show you how I used fair value gaps, right? So if we're looking on the 4-hour chart, I lost everything. Where is it? Okay, up here. Perfect. So on Friday, and now all my work up here is terrible. Okay, I'll get rid of that. Whatever, it can sit there. I don't even really care. Okay, so we have a 4-hour bearish fair value gap being created right here. Go ahead, we'll name that our 4-hour bearish. We don't even have to name it bearish, it's just a fair value gap, right? So we have it named as our 4-hour fair value gap. We'll put that there, and we'll scale down to the 30-minute chart so we can look within. Okay, yeah, it looks cool to me. I mean, we have one more over here that we could be suggesting as well. We'll mark that out just cause. Now we're going to be scaling down to the 5-minute because we're going to be looking for our entry on the day, right? So let's pretend we don't have any of this data printed out in front of us. Any of this data printed out in front of 9:30, right about here when market opens, right? So market opens. We see a little bit of movement to the downside. We're not too worried. Like, I must also mention that with this trade, I have draws on liquidity. Overall on the day here, I was bearish. I have draws on liquidity down here that we would potentially want to be taking out and hitting those levels. So I was definitely bearish on the day. So here we go, market opens, we make a movement to the upside, and what we're waiting for is for this overall 4-hour fair value gap to get respected. I'm sorry, I mean for it to get respected, because we want to take out these lows, right? But we had to mark out this 4-hour fair value gap so that we were able to know that, like, there's a potential that price might want to go fill that imbalance first before making its official move to the downside like our bias was. So we're sitting here, we are waiting until about approximately 10:50 area, 10:40 area. And what we're looking for is for this 4-hour fair value gap to get respected. So now we're zooming in a little bit closer to look at our trade entry. And we can see here on the 5-minute chart, we create this small little fair value gap right here. But this fair value gap was what influenced our entry. So we got a closure below because we'd already respected this 4-hour higher time frame fair value gap, and we're making that movement to the downside now. So now we're looking really within. We're looking within the market to look for our entry. So we see that this 5-minute fair value gap gets disrespected because we got a candle closure below. So I enter off of this because I used the internal. I put stops above these highs, and I had it down here on my first draw on liquidity, I believe, and we ended up sweating it out a little bit here with our stop loss, but we ended up hitting a approximately 2 RR trade. So that's how we used internal smaller time frame fair value gaps and higher time frame fair value gaps together to make a winning trade. One more thing I must include is when it comes to fair value gaps, higher time frame fair value gaps hold more value to me. They hold more truth within them, because if you really think about it here, I'll scale to the 4-hour to kind of put my thoughts into words here. This 4-hour candle holds 4 hours worth of data compared to a 1-minute candle that only holds 1 minute worth of data and price action that we're looking at. So if we have more and more and more and more data being collected over a longer time, what's more trustworthy, the shorter time frames or the higher time frames, right? So sure, you know what? Maybe in this bearish candle right here, there was movements to the upside when you scale down to the 1-minute chart. If we literally went to this exact time, we would see uptrends within on the 1-minute chart, but overall within the 4 hours, we were obviously very, very bearish, right? So we have to take into consideration the higher time frame, draws on liquidity, first of all, that's huge. And then also their fair value gaps. So that's why we ended up taking an entry that day off of a 4-hour. And then for example here, this is gonna bring us back to current time. Let's remove all these drawings. We still had our draws around here somewhere. I'm just gonna mark them out just cause whatever. But we had draws down here, and if we scale down to the 30-minute, now we're looking at Friday. Well, what do we see on Friday? We see two fair value gaps. We have one here and we have one here. Okay, so we want this one because it was more recent. We want the lower one. Yes, this was bigger, it doesn't matter. We want this lower one because it was more recent. It's going to hold more power, in my opinion, and I think others would very much agree with me. Another reason why I chose this, market open is around this area right here. So if we're looking at this when we wake up in the morning, we're looking, okay, well, we marked out this fair value gap. Price not only visited once, but twice, but 3 times, but 4 times before we had market open right here at 9:30, right? So what we have all these draws in liquidity down here. I'm just marking them out for, I don't want to scroll all the way back for you guys and waste your time, but we have all these draws down here from that I already showed you. And if we want to go down and take those draws because my overall daily bias is bearish, well, let's use this 30-minute fair value gap as an indicator, like, okay, if we come up and touch this price one more time, then we can know for certain if we reject off of it properly that we're going to end up coming and taking these lows down here that we had marked out from way back over here, right? That's what our, so overall bias, overall daily bias paired with usage of fair value gaps is gonna give you the winning trade. So if we scale down to the 5-minute, what are we looking at? We're right here at 9:30. We have a great move to the upside right into our 30-minute fair value gap. We reject so beautifully off of it. And what do? Then we look within, we see that there's a 5-minute fair value gap sitting right here. So if we're sitting here at about 10:10 in the morning and we're looking to take an entry, well, guess what? We just got a candle closure below our 5-minute fair value gap. So we have just disrespected the current bullish order flow. What can we do? Well, what did we do on Friday? We entered off of this candle closure with stops above these highs right here, and we targeted our draws all the way down here, I believe. We targeted these draws right here. So then my friends actually advised me to, in the Discord, to move my stops to above this fair value gap, because guess what? If we end up coming back up and getting a closure above this fair value gap, well, guess what? We just now disrespected the opposite order flow. So we might be in a chop, which would mean that we're wrong, right? So basically, this is what we did. We ended up taking this trade right here. We entered off this candle closure with stops above this fair value gap, and obviously we ended up smacking this 5RR trade. You guys can actually go check out my previous trade recap video that I did, I believe like 2 days ago, about my Thursday and Friday trades. Very similar models, entered them the exact same way. I think I ended up making like $700 almost on each trade. So yeah, definitely go check out that video, those 2 videos. And yeah, so this is how you use fair value gaps within the market. Very easy to mark out. I could sit here and mark them out all day. Here's one, very easy. Here's one. Mark them out all day, guys. Right here. They're everywhere. Small ones, even more ones that are a little harder to see. Big ones. You can use them all the time, right? So if we were looking, for example, at this one right here, well, guess what? This one is within. If we come down and we sweep these lows and we end up taking a candle closure, we could even do this one because it was more recent, just like my previous point was, the more recent ones hold more value, right? So now we just created this fair value gap. If we just swept these lows and we're expecting a movement back to the upside to start taking these highs that we just created throughout the day, then we can look for a candle closure above this. So we got a candle closure right here, right above this. This one didn't quite close. We might enter a long off of here with stops below these highs or lows, and then target potentially like, let's see here, potentially like these highs over here, these highs that were created, right? So now we're hitting a nice 3RR because we saw that candle closure right above this fair value gap. And it was most recent. That's why it's more important than this one, because this one was more recently, right? So I hope this was a good explanation on fair value gaps, guys. Let me know in the comments what you think. If I did a very poor job explaining, let me know. I'm very new to YouTube. I don't make many videos at all. So, I mean, yeah, I'll take any feedback that you guys have. I'm open to any criticism. So thanks, guys. I appreciate you watching, and yeah, thank you.